Welcome back, everybody. I want to introduce you to a woman. Her name is Diane Hendricks. She runs a company called ABC Supply. It's the country's largest distributor when it comes to roofing, windows, siding. Also the richest woman when it comes to the state of Wisconsin. She's worth about $2.5 billion. And, well, this lady here did not pay a single cent in state income tax in 2010. I would imagine you're asking why. Well, the answer is because in a minor tweak in how her company is structured, all is owed here to the CEO to get out of state income tax, which basically changed from a C to an S corp. She's just one of more than 20,000 people like her across the country, wealthy tax filers who don't have to pay any federal income tax. Now, it's complicated. We're not going to get into all the reasons why, but trust me when I say there's a lot of deductions and exemptions in the federal tax code that have allowed this to happen. In 2009, about 1,500 of those untaxed wealthy individuals were millionaires. Now, you probably thought it was impossible, but you would be wrong. How does somebody who finds himself at the very top end of the economic spectrum in America avoid paying any taxes altogether? And for most, it's about, well, donating to charity possibly, or investing in local state governments, earning money overseas, and then writing off things like doctor bills. Well, joining us now to not only talk about this, but also what I believe will be a narrative and a debate going forward in this election year is Stu Kessler, former president of the New York State Society of CPAs. He's also director at J.H. Cohn, one of the top 15 accounting and consulting firms in the country. Stu, thank you very much.
Pleased to be here.
You know, this is all under a backdrop of the competing tax plans, the Ryan plan that Romney's endorsed and Obama's plan, and it's really centering on what should be, in effect, what is equity and what is fairness in the tax code for the top 1%. Obama, he wants to have the Bush tax code go from 34% up to 39 or 35 to 39% from what it was in the Clinton years. And if you look at the Ryan plan, he actually, Romney that is, wants to reduce the top end rate to, I think it was 28%, right?
That's correct.
So there's a debate about what should and shouldn't be taxed and then the benefits or the cost to us as a country. Now we see this number, 21,000 people here not paying a penny. Good for their accountants, but not so good, you'd argue, for America. Were you surprised that many people get out of paying any taxes?
Not at all. Not at all, because they're really talking about people that are making $200,000 or over. A lot of people making $200,000 don't pay tax for what you mentioned in the run-in over there. They have a lot of charitable contributions, they have a lot of medical expense perhaps, and they're not affected by the alternative minimum tax, which is the big bugaboo that we have.
Now, you remember this, I'm not trying to date you, but in '69, there was about 150 people in the country who fit the category that we're describing now, except there's a multiple of them. You can add a few zeros how many fit that category. Congress was so tweaked that, my God, you had 150 people that have deep pockets, that didn't pay a penny. They created the alternative minimum tax, and they created it, by the way, with bipartisan support. You now fast forward to today, and you got all sorts of debates about what is and what is not basically fairness on the top end. Give a little bit of a history guide. Have we seen it like this, except it just get national attention, or has it kind of been on steroids here in the last few decades?
Well, the AMT, Alternative Minimum Tax, started up, as you said, in 1969. It was meant to catch these 155 ne'er-do-wells who were not paying any tax at all. But it created a type of an atmosphere not being indexed for inflation, so that today, many of the middle class, many of my clients who make less than $100,000 are caught in the AMT. They should really repeal the AMT, but they repeal the AMT, they have to replace it with something else. And that's where you get to the situation that you said.
The Washington,
the Ryan possibility, Simpson-Bowles discussion. It's got to be done. It's got to be dealt with.
Now, God bless the CPAs, but my question is, when people, the general public, heard on the trail, guys, remember when Romney said, yeah, I pay about 14% in taxes? And people said, time out a second. How's this guy paying 14%? And I'm going in my pocket for just on the federal level, 34 or whatever the percentage is. Then you add in all my other taxes, state, and you can keep going here. I get it. But do you remember it like this, where with the amount of deductions, with the amount of monies that people are sticking overseas, that the top end, there's a growing frustration, not just between the gap of the have and have-nots, but the seeming two different sets of rules. if you got money and you got different ways to use that money versus somebody, like you said, a middle-class client of yours, it seems like the deck's stacked against them.
Well, I wouldn't blame the people who prepare the returns, the CPAs and the attorneys. It's the Internal Revenue Code,
yes,
and it's Congress that adds to the Internal Revenue Code. When I started in practice, not to date myself, the Internal Revenue Code and the regulations were this big. Now they're, excuse me, this big over here. And Congress adds loopholes and everything like that. They really have to redo the code entirely. And they're not going to deal with that until the lame duck session after this Congress, and we don't know what they're going to do.
Yep.
Whatever we prognosticate will probably not happen.
Do some quick math for us. We talked last week, the Ryan plan. When you dig into it, he's reducing tax revenues here about $450, $480 billion. In addition to that, the deficit would go up about another 420 on top of that. I think all told it's about $900 billion. Nice rounding number.
Right.
And then the cuts to correspond to offset it. We're talking digging into bone here. We're talking some really draconian cuts. When you talk to clients about balancing their books here and getting their numbers right at the end of the year, not just paying their returns, it does seem to be some crazy math that we're talking about.
Well, not only is it crazy math, but it's crazy math on both sides. The top group aren't paying their share of fair taxes, and even the bottom group.
Yep.
Over 50% of taxpayers pay no income tax whatsoever. They pay a lot of Social Security tax, and that's sometimes a bugaboo. They pay Medicare tax. In fact, the American Institute of CPAs has put out a tax guide where you can plug in on the internet what county you're in the country. It's by county. Plug in what your income and all those different things are, and you can find out what your real tax burden is, which in many cases may be up to 65% of your income.
Mm. Well, Stu, you depressed everyone. Thank you very much for that. But no, I do think we're going to have a tax debate like we haven't had in recent years, because people want, I think, equity, at least a perception of equity, and I don't think many people believe we have that right now. But Stu, great job. Thank you very much.